Alright, just want to do a quick video. This is going to be on Beyond Meat and NIO. So we're going to go ahead and kick it off with Beyond Meat. So this is BYND. Currently have the 1 year or daily chart up here on the screen. And, pretty clean. Just looking at some key levels currently. This is not specifically something that I am interested in, but I know that it is a quite popular stock to be traded, especially after all the hype, which got it up around this $240 level, and now we're sitting at $80 a share. The last drop being due to the lockout finally releasing and seeing about a 20% drop. I think it still has more downside to go. Time will tell. But currently, what we are looking at is specifically this last little support line, this last little, like we started out right around $45 a share. We came up, back down, up, down, and then just went straight up. So this is kind of like that last little bounce. You have the $100 price point right up here, but this last little bounce right around the mid 70s. It's just right around 77. You can see right now we're trading around $81 a share, down a smidgen today. But that would be the price point. Currently, I would be curious to see what we do when we hit that, because I personally think that we will come and we will bounce off that level. It might just be a quick tap and we see a bounce, or it might be that we kind of sit on it for a little bit and maybe slowly start to deteriorate down lower and then a quick drop, or we slowly start to gain some support and we consolidate and start to see this move back higher and start to scoop back up. We start to see these moving averages level off and then move back up along with the price. So that would be what I'm looking for. But currently, as an investor, as an trader, this is not something that I would want to invest in. I mean, you're talking the high was back in late July, and it was way overpriced. And I think it still is overpriced. But when you look at this trend, I mean, that's a significant trend to the downside. You're talking about, like a 60% loss if you got in at the highs to now. And you could still be, if you were to get in now and we took it down, say down here around the $62 level, that's another 20 to 21% down. If you took it all the way down to 45, you're looking at another 40% of the downside. So there's still, while we have come down a lot, there's still a lot of downside that you can be hit with if you don't get in at the right level. And you don't I know that you can't wait to see all the signs, because once you see everything line up, once the stars align, then a lot of people who have already wanted to get in have gotten in, and the price may be moving out of your range. But if you come up with a plan before, and maybe you set up a buy right around here, around 76, 75 is your price point, and maybe you have a stop just a little bit below. So I'm going to move it in a little bit tighter. So maybe this dips down one more time, right around here, we'll call it around 77, and you're shooting for an $85 sell. So that puts you at about a 10% gain, and maybe you sell somewhere in the neighborhood of $1 to $1.50 below 77. So around 75.50. You're looking at about a 1.5% to 2% decline to the downside. So you kind of have to weigh it out. Are you wanting to risk 2% to possibly make 10? While that sounds good, a 1 to 5 ratio, you have to think, what is the probability of that actually occurring. And you just kind of have to think that through. Is this going to be the best trade for you to take on if you have just a limited amount of money, a limited amount of trades? Is that the trade that you're wanting to make? But overall, at the moment, this is not something that I would want to hold in my portfolio, just because I'm not really certain where it's going to go next. It's kind of volatile, pretty volatile. So I'd like to see it level off, gain some sort of support. Here's some maybe good news about it. Also, I'm looking at the PPO. It looks as if we have, just this basically the PPO is just getting wedged. So I'd like to see if we can maybe break through this upper bound. That might give us more of an inclination that, hey, this is probably going to pop back up, maybe above the $85 mark, or at least to the 85 mark, and maybe we can make it back up to $100. Maybe that's a possibility. So that would be something that I would also pay attention to. But again, not something that I'm currently interested in. But if you wanted to play it, there are definitely some rewards that could be possible if you play it just right. Let's go ahead and look at NIO. Humongous day yesterday as well as today, but not in the same sense. Today we are down over 13%, but the day before we were up like 30-something percent. It was ridiculous. And this came on the news of NIO partnering with Intel, using their autonomous Mobileye software to create an autonomous vehicle. And so that just ripped the price up and got us to a pretty important level. So, sometimes old supports or old resistances still hold their value, even if it is an extended period of time into the future, while maybe the investors or traders are not still there who set that support or resistance in the past. It is still a psychological level for the traders trading it currently that, hey, that is going to be a support, that is going to be a resistance, and that is what we had right around here in the high $2.30 to $2.40 mark. So we had this decline. We fumbled around the $1.50 mark for a good period of time. Then we started to climb actually before that. So here was our news yesterday. And big gains there. So yeah, about 34%. But we were starting to climb before there, so maybe gave a sign that, hey, something is on the way. We saw from here to there, it was about a 13% gain, and then we continued after hours and then pre-market, and then we just ripped up. So I mean, if you got in around 150 and you sold out right around that 240 mark, you're looking at about a 50% gain in the course of 2 days. And then we saw the pullback. And again, that pullback was not necessarily a surprise. If you had traded this, and even if you got in somewhere along the run-up, maybe as we broke, say, $1.75, you got in, you got to look back at the long-term time frame to find some of these resistances, because if you got in again, let's say right over $1.75, maybe $1.78, you were up about 40%, 37.5%, and then you drop back down. Maybe you gave up, a good 20% of that today. If you thought, oh, this thing is just gonna keep going, we're gonna break over $3, and that's just not logical. You need to, especially with a big mover and such, in the penny market, you can see those multi-day runners, but you don't want to get too greedy. If you get too greedy, then you get burned. Let's say you got in, right around that 230, 240 mark. I mean, you got torched today. you would have been down, a hefty chunk, 10%. So that's, I mean, you just gotta pay attention to some of these levels. I'm not saying that I'm a perfect trader, but you just need to have something developed in your mind, written down on a piece of paper, on a spreadsheet that says, hey, this is where I'm getting in. This is what my stop loss is going to be. This is where the resistance was in the past. Here's my support. Just reason out with yourself why you want to get in, and if in the possible scenarios that you could see when you're in it. So you take out that emotional aspect. You already know or have a good idea of what you could possibly see, some different scenarios, and then trade it from there. So, goodness, I'm just rambling on. But anyway, 34% gain, 13% drop the following day. What are we seeing from here? Well, with these penny stocks, usually the 50-cent and dollar increments are going to be supports and resistances. So let's see if we can fit. No, that's not going to be enough. Let's go back to the 4-hour. And we'll look. So we're right around this $2 price point, and as we were, stepping down right around it last time we were trading around this level, there was a little bit of trading going on, not a whole lot. We quickly moved through it with the amount of sellers that we had, but I wouldn't be too surprised if we dipped back below it and maybe down towards somewhere in the low 180s. But I would like to see it bounce right around there as we start to see some of these moving averages on the 4-hour start to scoot back up. I would hope that it would kind of support the price of NIO and maybe hold it at a little bit higher level than what we were seeing back here. We also have earnings coming up in just about a week, so that's also going to be something important to look at, which could swing the price one way or another, along with any news that comes out in that earnings report. So just some things to look at again as we start to move back up. Pivotal resistance is going to be right in here around the high 230s. From there, I would put in one right around the 250 to 260 is going to be your next resistance. So really, once we get up to these levels, it's going to be a lot of grinding to get back up. A lot, especially with these bag holders that were stuck from this initial move. If they're not out at this point, you also have to keep that in mind. All these people that got burned to the downside, they're wanting to grab back any penny that they can. They just don't want to be in it anymore. And so they're just going to sell as this continues to move up. And that can also lead or contribute to these big red days. So just keep that in mind when you are trading any stock, not just NIO. So I hope you guys enjoyed this video, maybe got a little bit from it or understand something a little bit better and implement it in your own trading. So thank you guys for watching.